Hello, everyone. Tesla, a name that doesn't need to be said, holds the keys to an exciting, mysterious, and not stoppable under the surface of this electric titan is a story that is full of secrets and opportunities. We'll look at Tesla's recent Q3 production and delivery numbers and figure out what they mean for the company's future. You'll also get an inside look at how Tesla's growth compares to that of traditional automakers and new EV competitors. Are they keeping their lead, or is the gap closing? We'll also talk about Tesla's expansion into new horizons, including the much-anticipated Cybertruck and the game-changing Tesla Semi. How will these new ideas work? Move Tesla even further ahead, it's important to understand Tesla's finances. We'll break down the numbers and projections that could affect Tesla's finances in the coming quarters. Finally, we'll look at the risks and challenges that Tesla might face, giving investors a full picture of what they should be on the lookout for. Come with us on an exciting trip through Tesla's world of innovation, where deliveries are on the rise. There are going to be market-leading goods soon, and the competition is having a hard time keeping up. Stay tuned as we reveal the secrets behind Tesla's rise to become the best car stock. Don't forget to like this video, and to get more, subscribe to Tesla Stock News. With that out of the way, let's start this movie. Tesla's recent deliveries report was softer than expected, but the company's dominance remains undeniable. Imagine a 40% rise in deliveries in 2022, and now Tesla is on track for another 37% rise this year. Can you believe it? But wait, there's more. With Tesla's cutting-edge innovations, the future looks brighter. The much-anticipated Cybertruck and Tesla Semi are about to make their grand debuts. These groundbreaking products will be hitting the road soon. Also, Tesla's expertise isn't just limited to cars. The company's energy generation and storage division is quickly rising as sales in this area are expected to skyrocket thanks to continued growth. Now, let's talk about Tesla's foray into artificial intelligence. The company isn't just dabbling with AI, it's leading the way in integrating AI with electric vehicles. Tesla's gap over its competitors is slowly growing, solidifying its position as the undisputed leader in its field. It's fascinating to see how they're changing the auto world, despite the high price tag that comes with it. Tesla's stock is a sign of strong demand. Its growth rate is faster than that of other cars. This is likely to keep happening, and there's more good news on the way as the economy recovers from its short-term slowdown and looks forward to a future based on help. Electric car company Tesla is expected to make a lot more money, which is good news for the stock. Among the rising stars of the electric vehicle EV world, Lucid, Rivian, and NIO, there are also classic automakers like General Motors, Ford, and Toyota. Tesla stands taller than all of its competitors, making it stand out. Not only does Tesla contribute to the story of cars, it also changes and shapes it. With its sole focus on electric vehicles, the company stands as a giant between the old order and the new frontier. Tesla has not only questioned the status quo, but it has also set new standards for technology, energy efficiency, and manufacturing in this field of many rivals. Tesla stands out because of its unique mix of innovation leadership and market impact. This makes it not just a participant in the auto industry, but a trailblazer who is shaping its very future. The problem with legacy automakers is that they stick to internal combustion engine, IC vehicles. This technology is slowly being pushed to the background of automotive history as countries around the world usher in a new era. For example, Norway will only allow zero-emission vehicles from 2025. Israel and Singapore are following suit by banning the sale of new ICE vehicles in 2030. In China's huge auto market, a goal has been set for EVs and non-EV vehicles to make up more than 20% of sales by 2025, with 2035 ultimately taking the lead. The US, which usually likes cars that use a lot of gas, wants half of its new cars to be zero-emission by 2013. The numbers show steady small drop in production and deliveries over the last 3 quarters was mostly due to planned downtime in Tesla's factories. More than 1.37 million vehicles have already been shipped in these 3 quarters. Tesla is sure that they will sell more than 1.8 million cars. Mark expects over 430,000 deliveries in Q4 alone this year, which is a strong 37% rise over last year's numbers, according to Tesla's most recent report on Q3 production and deliveries. The numbers say a lot about its position in the market and its potential. The company released 15,185 Model SX cars and an amazing 4,974 Model Y3s. If you take into account the 8% leasing rate in the Model SX class, sales are expected to be around 1,476 units. In the same way, about 42,311 vehicles were sold in the Model Y3 segment with an average selling price, ASP, of $444,000 for the Model 3Ys and $10,000 for the Model 6, based on a 4% loan rate. We predict that Tesla made $162 billion in vehicle sales in Q3 for the Model SX segment and a healthy $17.7 billion for the Model 3Y segment. It is expected that Tesla will sell about $19.3 billion worth of cars in Q3. These revenue predictions are in line with what most people think will happen. Profitability in Q3 could be higher than expected. Tesla has about 3,171 billion shares out there, and most analysts expect the company to make about 76 cents per share in the third quarter. Based on the last quarter, this means a net income of about $241 billion or a net income margin of about 99.9%. The actual EPS for Tesla was 91 cents, which was 10 cents higher than the consensus estimate. This is a 12.35% beat rate. The net income margin for the quarter was about 10.8%. If Tesla maintained this 10.8% income margin in Q3, its net income would be around $2.64 billion, which is about 83 cents per share, a 9% beat rate. This means that Tesla could potentially beat the lower consensus estimate EPS numbers. Considering Tesla's longer-term profitability potential, the company reported an EPS of $47 in 2022, but this year's consensus estimates show a 17% year-over-year drop to $3.40. This drop is because of short-term things like the slow macroeconomic conditions, higher prices caused by inflation, and other short-term events. So as the economy gets better, Tesla's profits should go back up. For the next year, the average EPS estimate is around $4.75, but Tesla could easily beat this, especially if the economy gets better in the second half of 2012. Tesla's net income margin was about 15.5%, but it dropped to 10.8% in the first half of 2023 because of a number of temporary reasons. If Tesla can make as much money as it did in the first half of 2022, its net income on expected revenues of $130 billion could be around $205 billion, which would mean an EPS of about $635, which is much higher than the average estimate of $475. It's also worth mentioning that the highest EPS estimates go up to $758, so the $635 number, while higher than the consensus, is a more conservative and accurate guess. The consensus number of $475 means a net income of about $15